you for BFM. We are in Module A and International Banking. Today's topic is very important. Why? Because we will be covering the important part over here is risk related to Forex as well as related to the retail banking, this Forex as well as the local also means bonds. Okay. So follow this video completely. Beforehand, I would suggest download Adda 24/7 app on your mobile. In this app, you will be getting all the premium study material, current affairs, job alerts, daily quizzes, live video lectures. Plus, you will be getting the test plus question banks. You will be and notes. You will be getting everything related to JAIIB, CAIIB, and various banking exams. Also, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting all the updates related to JAIIB, CAIIB and various banking exams. Also, you will be getting free YouTube series. These are the two new batches for English and Bilingual for CAIIB. Here, all the four subjects are covered: ABM, BFM, ABFM and BRBL. Then the batches have already started. So more on this later. You will be getting huge discounts also. I'll give the details of this. So schedule for today is basically we'll be covering three important topics, then formula and case studies. Okay. So risk measurement. First topic is the risk measurement, then sensitivity, then volatility, then formula for volatility, and then we'll be covering the case studies. Okay. So let's start. Risk measurements here. Risk measurement in banking is mainly related to market risk. Okay. There are three types of risks in banking. Okay, that is importantly, not three actually. There are more than three types of risks, but main ones. Okay, market risk, then credit, then ops. Okay, there can be other risks also. Means related to like forex risk. There can be related to interest rate risk. There can be many risks, but mainly as per the Basel, these three are covered. Okay. Now in this part, the very serious part is market risk, because remaining these two, credit and ops, they can be controlled by the bank itself. Because credit means giving the loans and basically giving the loans only, and ops means related to the employees and the technology. So these two are within the hands of the banks, but market risk is not in the hands of the banks. So that's why measurement of market risk is very important, and that is always based on the two parts, that is sensitivity and volatility. So what is sensitivity? It is change in the market value due to 1% change in interest rates. Now 1% change in interest rate means what? If the rate of interest changes by 1%, then what will be the change in the price of my bond, number one, and mainly bonds, because everything is related to bonds. In basically when you go for the higher level in banking, everything is related to bonds. The interest rate gap is sensitivity of the interest rate margin of the banking book. Duration is a sensitivity of investment portfolio or trading book. Now understand 2-3 parts over here. One is this 1% change. Similarly, see this 1% change concept you had earlier also in JAIIB. That was related to which this duration. One was Macaulay duration and second one was modified duration. So modified duration is basically telling us about this 1% change. What does modified duration say? Modified duration says percentage change in price divided by 1% change interest, right? Interest means yield, we call it yield. Okay, so 1% change in interest and percentage change in price. So this is basically sensitivity. So it is the change in the market value due to 1% change in the interest rate. What is the change in the price of my bonds? The interest rate gap is a sensitivity. Sensitivity means how fast does it change with respect to the interest rate changes. What do you mean by interest rate? 1,000 times I am telling interest rate. What is that? What is interest rate? Type fast in the comment section if you have understood this interest rate part. See, our interest rates can be 2-3 types. Okay, depending on which benchmark are we talking of. It can be repo rate, it can be CRR, it can be reverse repo, or it can be bank rate, anything. Okay, so depending on which benchmark are we talking of, that is called as interest rate. Okay, basically this leads to the change in the yield of the bonds. Yield means the required returns. Duration is the sensitivity of the investment portfolio of the trading book. Okay, investment portfolio, or you can call or also trading book, that's okay. See here, trading book, there are two types of books in banking. Okay, one is banking book, banking, and second is trading. These are the two books in banking always, means treasury always deals in these two books. In banking book, this is mainly for statutory requirements, CRR, SLR, right? This is mainly for these two, and trading book is for profits. Okay, this is mainly for profits. So whatever I buy in the banking book, I don't sell it, I keep it till the maturity. So that's why this change in the interest rate doesn't hamper it, or doesn't create any effect on this banking book. But on trading book, it definitely, because trading book, I'm buying the bonds for selling, I'm doing it for business, so that's why profits are involved. That's why this is called as M2M, mark to market. Second part is based on volatility. It is a common statistical measure of dispersion around the average of any random variable such as earnings, market, mark to market, and loss due to default. Okay, so remember, volatility means what? Volatility means deviation, standard deviation. Okay, standard deviation, I'll write this deviation full. Okay, deviation, standard deviation, that is called as. Okay, and square of the standard deviation is called as variance. Okay, so these are the two types of risk measurements, mainly market risk. Okay, statistically, volatility is a square of standard deviation of the variables. Okay, so volatility means basically what? See this, volatility is a square of standard deviation. Okay, now variance can also be called as this standard deviation. So volatility will be more if the time horizon is more. More the time, more will be the volatility. Now, instead of calculating 10-day 99% value at risk directly, analysts use 1-day 99% risk and assume 10-day VAR equals to square root of 10 into 1-day VAR. Now what is this are we talking about? This is a formula part which I have already given in that schedule. Okay, so as per this formula, see this, suppose I'll give you one or two problems over here. Suppose if I am having 1-day volatility, 1-day VAR. Okay, so that is, let's say 10%, or not 10, it will be too heavy, 3%. Now I want 1 month VAR. So 1 month VAR will be, how will it be calculated? Square root of 30. 30 why? Because number of days in the month, into 1-day VAR. So square root of 30 into 1-day VAR. 1-day VAR is 3%. So 1 month will be square root of 30 into 3%. Similarly, 1 year VAR will be 1 year equals to square root of 365, okay, or number of trading days, whatever it is, into 1-day VAR. So important is always 1-day VAR, and then divided by whatever. Suppose if I require for week, then square root of 7 into 1-day VAR. Okay, this is the way we calculate the value at risk for various durations. This is exactly true when the portfolio changes on successive days from independent identically distributed normal distributions. Okay, so important part over here is this first part. Okay, now we'll go to the problems part, but before going, see this, we have arranged for the felicitation ceremony for all the students who have cleared JAIIB and CAIIB in November and December 22. The program is arranged on 8th of January 23 at 12 p.m. and the venue is 2nd floor, Tower A, Unitech Cyber Park, Sector 39, Gurugram. Adda 24/7 will reimburse your 3-tier tickets on both sides. See this is very important. So Adda 24/7 will reimburse your 3-tier tickets on both the sides. So that's why you can definitely go for it, isn't it? Now we'll cover the numericals. If 1-day volatility of a security is 2%, how much will be the monthly volatility? Just now I told you, monthly volatility equals to daily volatility into square root of 30. So monthly equals to, see this, monthly equals to square root of 30 into daily is what is given daily 2%, right? So square root of 30 is what? 5.477. So 5.477 into 2%. So it comes to 10.95%. Okay. So that is how we calculate the monthly. Suppose if I ask you weekly volatility. Weekly will be what? Week. So it will be square root of 7, right, into 2%. So what is square root of 7? Square root of 7. Anyone type fast in the comment section. What is square root of 7? Yeah. Square root of 7 is, yeah, fast. Square root of 7. So it is fast here. I'll also do it. Okay. 2.64, right? So square root of 7 is 2.64. So 2.64 into 2%. Okay. So it comes down to 2.64 into 2%. So it comes down to into 2. 5.29, right? So 5.29 is the weekly weekly volatility. Got this point? Similarly over here 10.95 is the monthly volatility. If you want yearly, then similarly you can do root of 365. If per annum volatility is 30% and number of trading days per annum are 250, how much will be the daily volatility? Now very simple problem, isn't it? Annual volatility equals to daily volatility into square root of 250. Why 250? Because number of trading days is given as 250. Okay. So I'll write it over here now. A equals to D into square root of 250. But what do I want? I want daily. I am having annually, right? So annually it's given as 30%. So 30% equals to D into square root of 250 is 15.81. Everyone do it yourself, do it on the calci, everyone, okay? Say this, 30 equals to daily into 15.81, okay? So what is daily volatility then? 30 divided by 15.81. 15.81 will go on this side. So it will be 30 upon 15.81. Roughly it's 1.90%. Roughly you can take it 2%, isn't it? So this is the way we calculate daily from annually. And if I want weekly now, sure, if you have the same problem and you get it, you are asked to find a weekly volatility. So in that case, what you'll have to do, first you'll have to find a daily volatility and then find a weekly. Weekly will be then D 1.90 into square root of 7, right? This is the, or 5 working days, so 5, okay? Depending on the days what are given to you. So whenever you are given any annual or anything, firstly what you have to do is to find a daily volatility. That is very important. Got it, everyone? Type yes in the comment section. Type fast in the comment section. Yes, if you have understood it. Okay. If one day VAR of a portfolio is 50,000 with 97% confidence, in a period of 1 year of 300 trading days, how many times the loss on the portfolio may exceed 50,000? Now what do you mean by this problem? One day VAR is 50,000, 97% confidence. Means what? It means that, see here, I have given the solution also over here. 97 confidence level means loss may exceed the given level, means what is the level? 50,000. See here, understand whatever this problem is saying. The problem is saying, if the loss is 50,000 per day, it's bearable to me. I am okay with it, 50,000 loss. But if it goes beyond 50,000, then it's a riskier part for me. So if the daily loss is 50,000, it's okay for me. So what is given? 97% confidence. 97% confidence means what? See here, percent means what? Out of 100. So out of 100 days, 97 days, my loss will be less than 50,000. Less than or equal to 50,000. Okay. This is the meaning of this problem. From 100 days, 97 days, out of 100 days, my loss for 97 days will be less than or equal to 50,000. But what does it mean? For 3 days, it will be greater than 50,000. So I have to worry about this part, this greater than part. Okay. So this is the question asked. In a period of 1 year, 300 trading days. 300 trading days is given. So out of 100, 3 days, my loss goes beyond 50,000. So now how many days are there in a year? 300. So out of 100, 3 days. So out of 300 it will be what? 100 into this 3 upon 100. So it will be like this, 3 upon 100 into 300. So it will be 9 days. So that's why the answer comes out to be 9 days. So in a year, for 9 days, my portfolio will be out of my risk capacity. 9 days only. Remaining 293 days, the portfolio will be within my capacity. Let's say another one. One day VAR of a portfolio is 50,000 with 90% confidence. Here, now it is 90% confidence. In a year, 250 days, how many times the loss on the portfolio may not exceed 50,000? Not, I want it, not, okay? May not exceed 50,000. Now look at the question properly, okay? Firstly, it was may exceed, right? Now it is may not exceed. So look at the problem. So out of 100, 90 days, my loss is below, less than or equal to 50,000. Now I want 250 days. So in 250 days it will be what? So this 250. So in 100 it's 90 days. My loss does not exceed 50,000. So in 250 days it will be what? See this. You can do it either ways. As I've done it over here also you can do it, or you can do it directly also. So it will be 250 into 90 upon 100. This way also you can do it. You will get the same answer. Or you can find for how many days does it exceed and then find the required answer. So 90% confidence level means 10 days out of 100 the loss will be more than 50,000, isn't it? 10 days out of 100 the loss will be more than 50,000. So in 250 days how many days will be there? For 100 it is 10 days, loss is more than 50,000. So for 250 days, 25 days. So out of 250 days, 25 days my loss will be more than 50,000. So how many days it will be within that? So it will be 225. So that's why I get the answer as 225 days. Okay. This 25 days is exceeds. But what do we want? Do not exceed. So this is the required answer in this problem. Okay. Got it? So this is 225 is the required answer in this. Okay. Now about this English and bilingual batch which is there for CAIIB for May 23. Remember ABM, BFM, ABFM and BRBL. All the 4 subjects are covered in both the batches. You can go for either of these as per your language preference. Okay. Bilingual means it's Hindi and English. You can use the code Y432 and get huge discounts. So how do you get the discounts? Let me show you live over here. It's here. Go to Adda 24/7. Go to Adda 24/7. Here, click on JAIIB and CAIIB on the front page itself. Okay. Click on this. Then you'll see JAIIB, CAIIB Mahapack, CAIIB 23. Click on CAIIB 23. Once you click on CAIIB 23, see this. You will be getting bilingual and English batches. Both the batches you are seeing. Click on the English batch. You will see the details of the English batch over here. Go through the details. Take your time. Okay. Be at ease. Take your time. Okay. I'll read the main points over here. See this. Recorded videos are available anytime, because what happens during the banking timings, we many times don't get the time to attend the lectures due to some extra work, some manager gives you the target, so we won't get the time. So that's why recorded videos are available over here, specially designed for May 23. Mocks and ebooks are available. Live two-way interactive classes means you can ask the questions anytime. And the fees is 23,999. What do you do is, don't pay this much huge fees. Okay, click on view offers. So this, click on view offers. Put the code Y432. Click on apply. Now look at this. 4799 is the new fees. Means 23,999 reduces to 4799. Such a huge discount. Go for it immediately. Okay. Also, I would suggest you go for one more part, that is Mahapack. What is Mahapack? I'll tell you about Mahapack, because Mahapack is something very interesting. It gives you multiple batches, okay, in the same amount. So the JAIIB, CAIIB Mahapack. Click on this Mahapack. Now look at this Mahapack. CAIIB ka Mahapack. Click on this. See this. What you are getting right now is, it's a 6+6 validity. You can read this. 15 plus batches for ABM, BFM. You get 15 plus batches. In earlier thing, you got only one batch. So you get 15 plus batches. You'll also get this batch which we are covering right now, isn't it? Then recorded videos are available. Video courses are available. Numericals and revision batches are available. Means 15 plus batches is a huge time. Even if you go through the each batch once, not even learn, then also you'll definitely understand all the concepts and be able to give the paper easily. So what is the fees? 35,996. Don't pay such huge fees. Click on view offers. Put the code Y432. Click on apply. See this 35,996 reduces to 7,199. Also, it's a double validity pack, so you'll be getting it for 12 months, okay, and 80% off. Go for it immediately. Why? Because this offer doesn't last for long. Now I'll tell you about the new portion also, because what happens, many of us don't know the portion, right? So the new portion for CAIIB is we are having 4 papers now: ABM, BFM, ABFM and BRBL. Okay. So these are the 4 subjects. ABFM and BRBL are newly introduced. Also electives, there is no retail elective. Rural, HR, IT, central and risk. No rural, no retail. Okay. Negative marking is there and subjective questions are there. Means you'll have to write something. Okay. Earlier it was only objective. So that's why you'll be needing a guide for this. I'll be back tomorrow with another series. Join the classes ASAP.